Welcome back to the Humble Market Timer YouTube channel. If you enjoy the content, please like, comment, and subscribe. Now today's video is going to be a little bit different than what I normally do. I'm going to make this more of a teaching video. And what I will show you in this video is how predictable the buy points and sell points can be in a stock just by looking at the price action and utilizing a few different indicators and technical analysis. Now, I'm sure if it hasn't happened to you, you've known somebody it's happened to, where you see a stock and it is moving higher and you fear that the price is just going to run away from you. So you buy it, and then the moment you buy it, it tanks on you. I know it's happened to me. It's happened to just about every investor and trader that I know of. In this video, I'm going to show you a couple of different things you can do and look for and utilize to make sure that doesn't happen to you. This particular company I'm going to look at is WW Weight Watchers. The actual company is really not that important. What's more important to note is that this company or this particular stock has had strong price action over the last week or so. And it had a little bit of a breather the day or two prior. And then in the pre-market, it came out with some news that caused the stock to spike. And I'm kind of going to pick it up right here, which is where the news came out in the pre-market. And as you can see, the stock spiked in the pre-market, and then it continued to go up a little bit more once the regular trading began. And I stopped the price action at about 1:30 to about 2 o'clock, so you can kind of get some idea of how the price action has responded over the course of the day. And just by looking at it, I see one thing that I can do. I see that we have peaks that are slightly higher. So that is telling me that that could be the start of a very nice parallel. So I'm going to connect the lines of the peaks, and then I'm going to drop it down. I don't really know how far to drop it down to figure out the bottom part of the parallel, but so far we know that this has been the lowest part of the drop in price, so we're going to stop the parallel at that particular point. Drop it a little bit lower right there. So we've drawn our initial parallel. And also, we're going to look at utilizing the RSI. And as you can see here, we have a downtrending action with the RSI. But based on what we know about RSI, which is the Relative Strength Index, we know that the RSI, when it's above certain levels, it's a time to sell. And when it's below certain levels, it's time to buy. Typically, the buy portions of the RSI that you want to make purchases would be when it's in that 30 to 25 to 30 area. That is typically the sweet spot to buy using RSI. Now, I want to make one note about RSI. RSI works best with stocks that show strong price action. If a stock is showing weak price action, RSI doesn't work very well, because if it's really weak, that means there's intense selling or there's a diluting that's going on, and RSI just can't pick up bottoms and tops when you have heavy diluting and heavy selling going on. So you want to use RSI when the price action is strong. On this particular chart, I'm utilizing the 5-minute chart. You can use lower minute charts, such as 1 minute, but I like to use 5-minute charts on uh, stocks that are showing good price action. Now, I want to make one other thing clear to you. I typically like to look at stocks from an investment standpoint, but one thing you'll note, or I want to make note to you, is that typically the action that occurs when you're trading a stock occurs also when you're looking at a stock long term as an investment. The indicators, the trends that make it bullish, the trends that make it bearish are all the same. It's just that when you're trading, it takes place in a shorter time frame. When you're looking at it from an investment standpoint, you're looking at it from a longer time frame. So traders look at shorter time frames, investors look at longer time frames. So as an investor, I would be looking more at daily RSI or weekly RSI or monthly RSI. Traders look at more minute, 5 minute, 10 minute, 15 minute, 30 minute. They look more at the minute portion of the RSI. But you'll note, or you'll make note, that typically your best traders are also your best investors. And that's because the skills needed to pick entry points and exit points when trading is also used and is also very effective in picking those entry points and exit points when looking at an investment. So keep that in mind when I'm talking about this particular stock or in this particular example. But as you see, we have the parallel drawn. So we have this big flag pole, and then we have this flagging action that the parallel represents. And right now, the trading and price action has stayed within this parallel. So let's continue to move this parallel or move the price action of WW until we get to the end of the day. And that is right here. I have an arrow here noted where the day ends. So this is the action that occurred throughout the entire day. And as you can see, the price action was pretty strong. Let's continue to expand our parallel to keep it and have it go towards the end of the day. And as you can see, the price action stayed within the parallel until the very end. It fell out of the parallel at the very end. And other thing I wanted to make note, you see we had these 3 points that we used for the top part of our parallel. And we initially only had that 1 point, but then you'll notice that it hit another portion of the bottom of that parallel right here. So we have 2 points. So that happened to be a pretty good guesstimate for what would be the bottom parallel. But as you can see, the price action fell out of the parallel. And when you have the price action fall out of the parallel, it's a good idea to redraw your parallel so that the lower portion of your original parallel is now your midpoint. So I'm going to take this line and I'm going to extend it down. And that original bottom parallel is now going to be replaced by the midpoint of a much wider parallel. So that's something that is a little trick that a lot of people don't know about. But typically when you have your initial parallel drawn, the price action can fall out of it. And all that means is that you need to extend your parallel down, and that your original bottom parallel is now your midpoint. And as you can see, that line, the bottom now lines up pretty well with when the first move of the news first came out right here. So I think this is still a good parallel that we have working. Now let's continue to look at the RSI. You can see how the RSI has steadily continued to fall, and it's been a steady, gradual fall, not the sharp fall. That's always good when you see your RSI gradually fall. That tends to mean that once you get to the bottom of your buy zones when the pair of your RSI, which is in that 20 to 30 range, that oftentimes represents a good buy point. So as you can see, it hit that 30 to 20 area near the end of the trading day. And as you can see, that price is about $71, $70. Now, ideally, you would like for the bottom of your RSI in that 25-30 range to also represent the bottom of your parallel. But that doesn't always work. It doesn't always work that way. But just based on the gradual nature of the moving of the RSI down to the lower buy zone, that 70 area would represent a good buy point. You're not buying at the top, but you're buying at an area where you're starting to reach oversold levels, which is where you are or what you get to when you get to that 25 to 30 area. So now let's continue to see the price action as it moves through the after hours. Now, this is I noticed that a lot of people don't like to utilize the pre-market and after-market action, but a lot of it goes hand in hand. And you'll notice that as I go through this particular example. Now, one of the things that I'm noticing as I'm moving the action throughout the after hours, I'm starting to see another line that I think you need to be mindful of. And as you're looking at the action, things should be able to pop into your screen that you can see after you've looked at charts for over a number of years and hours. And I noticed that this seems to be a pretty prominent line right here. You have that line that has acted as support and resistance, and it has hit it several times. So when you see that line, we see that points are hitting a particular area multiple times, you know that's a strong area of support and resistance. One other thing I want to make note, as you notice the fall in the RSI, I drew a line to represent the fall. Notice that once the price action breaks the decline of the RSI, that was the point where we had a pop in the price action. So the RSI represents the trend, but as soon as the trend breaks, you oftentimes get violent moves up or violent moves down if it breaks higher or breaks lower in the RSI. But as you can see, we have now a line drawn here, and we've continued to see the price action, and here is where the price action stops at the end of the aftermarket. So let's continue to extend this line to where the aftermarket ends. Let's continue to extend our parallel. Notice all I'm doing is just extending what's already was established in the very first action of the stop. Haven't added anything. I'm just looking at what the price action, and I'm looking at various indicators based on just what I see. Now, as I'm looking at this, I'm noticing another indicator that you often see that can be determined as bullish or bearish. If you notice here, you see a shoulder, a head, and you're starting to see the formation of another shoulder. So in previous videos, I've talked about head and shoulder. Head and shoulder pattern formations are typically bearish. This action is an inverse head and shoulders formation. Inverse head and shoulder formations are bullish. So when you have that formation, once you break the neckline, you tend to get a pretty violent move higher. and you can determine the length of the move typically by measuring the neckline, which would be here, to the highest portion of the head, which would be about here. You take that line and you move it to wherever there's a break of the neckline. It hasn't formed yet, but because you see that action and you know that that is a bullish action, that is something that you need to be looking for. So as a result, what I would do is, because I know that if you break the neckline, that you would get a measured move, that right now it's showing to be about to the 102 action, to 102 area, I would pick a sell spot at around 99 cents to $1, and I'd keep adjusting it because this line is slightly decreasing. So as this moves further to the right, you are going to have a slightly lowered target price. But you keep adjusting your target sell price based on when you may have that break in the line. So let's continue to move the price action into the pre-market the next day, and let's continue to extend our neckline. As you can see, we have a break of the neckline. The break of the neckline right here. So that break of the neckline occurs right about here. That would have a trigger sell, or it should reach about $1.02. Remember, our buy was at 70 cents back all the way here. Okay. Let's also continue to move our original trend line. Nothing's changed. We're just extending the parallel, right? Let's keep moving, and look, lo and behold, where does the price action stop? It stops right at 102. So had we set our price sell part to that $1.99, we would have triggered, it would have triggered, and we would have made 30 cents on the trade just by utilizing head and shoulders pattern. And when you break the neckline, what the typical point that the price goes to once you break that head and shoulders. Let's continue. Now, once you hit that sell point, typically, once you hit it, you tend to get a retracement back to the neckline. That's typically what happens. Once you break the neckline, there's oftentimes a retracement back to the neckline. So let's see if we get that retracement. As you can see, the stock keeps giving up gains, and it keeps extending our line, and sure enough, we get a retracement back to the neckline. So at this point, if you wanted to continue to trade it, this would be a new buy point, because once you get a retracement to the neckline, if it holds, you tend to get another bounce. Let's keep extending our parallel. Keep extending the parallel. And as you will notice, if you keep extending the parallel, we finally hit the bottom portion of the parallel on the retracement from the initial break of the neckline. So all these points in here would be good potential buy points, because when you hit the bottom portion of a parallel, you tend to get a nice strong bounce on the first part as soon as you hit that bottom portion of the parallel initially for the first time. And then as you can see, we bounced off of the bottom of this long parallel. All we kept doing was kept extending it. We bounced it, and it bounced all the way back to the midline of the parallel. And again, let's keep extending this parallel. So at this point, I wouldn't trade the stock anymore because we had a long neckline and it broke, and we had some pretty obvious trading patterns where we could buy and get good entries and then get good exits. And the only things we utilized were the use of this parallel as well as the RSI and trend lines of the RSI. So all I wanted to show you in this particular video is that just based on parallels and price action and various indicators, you can guess to a pretty high certainty what will be your bottom and tops. And you could put your buy targets in those areas where you see that you're going to hit the bottom of that parallel, and then you can put your sell targets just below those areas where you're going to hit the midpoints of the parallel or the top of the parallel. Just those small indicators can tell you a lot about when you get in and get out, and it can really up your gains. And that's just in trading. The same tools apply when you're looking at it from an investing standpoint. You want to buy when the RSI is in that 20 to 30 range, except you want to buy it when it's on a weekly time frame or a monthly time frame. And you want to do it in stocks that have strong price action. Hope you enjoyed the video. Hope you learned something. I hope it's something that you can utilize in your trading toolbox and in your investing toolbox to help you maximize your gains. Once again, if you like the video, please like, comment, and subscribe. Thanks for watching.